In this video, we're taking a look at grant accounting, specifically for conditional and unrestricted grants. In an earlier video, we laid out how each grant should be classified into the type of grant it is. And this includes whether or not it's a unconditional and restricted grant at the top right there, the unconditional and unrestricted, conditional and restricted, and conditional and unrestricted. In this video, we're going to address the specifics of record keeping for conditional and unrestricted grants. So with that, let's dive into accounting for conditional and unrestricted grants. The rules are pretty clear. It spells out that conditional grants are recognized as revenue only when the condition is met. And when that condition is met, it's recognized immediately. And that means that we need to book that revenue when the condition is met. And that's true whether or not the funds are received by that time. So let's look at an example here and work through this situation. So we've got a budget here that we've laid out for the year, and it lays out that admin costs are $10 a month, fundraising is $10 a month, and programs are $80 a month, totaling about $100 a month. And then as you look at those dots there, they're basically saying that's June, July, August, September, October, November, and December. And that totals for the year $1,200. So now we know we need to raise $1,200. So we go out there and we do a fundraising exercise to raise that $1,200. And here are the accounting entries that need to happen. So for this particular situation, there's a conditional grant letter that arrives in January for $1,200 without a check. So now we've got the grant letter and it has a condition. And that's an important point to make. So what does the rules say? The rules say recognize revenue only when the conditions are met. Well, the reality is you've got the letter, but the conditions haven't been met. For discussion's sake, let's say the conditions are that you need to feed 600 people a month, and that happens in March. You're building up the program, and in March, when you hit that 600 per people a month, you get this grant of $1,200. So it's a very specific condition, and we cover that in another video. So since the condition hasn't been met, you've got the letter, there's nothing to do. GAAP doesn't require any entries to be posted at all. So the question is, how do we track this grant? We put that letter in our drawer and forget about it, and then come back and look at it periodically and say, have we met these conditions? Or do we want some kind of a trigger? So we can track this on a spreadsheet that we can monitor regularly to see whether or not we've hit the conditions. We can track it on other subsystems. There are a number of them out there. Or you could even track it on paper, and that'd be an offline system. And also, you have the option to track it within the accounting system. But now that takes some twisting of the accounting system so that management can see that a balance is outstanding and they can take care of it. So, well, of course, once the condition is met, the booking would be to debit accounts receivable and credit revenue. And then when the money is received, that's when you go ahead and say debit bank and credit the accounts receivable. So that's the easy part. Now let's look at the slide and the flow that might happen if we're trying to do the tracking within the accounting system. So when you get the letter, the first entry that you could make could be debit equity conditional. This is really a sub-account within equity, and it is a memo tracking entry. It's not really an accounting entry. And you could credit unearned income. So these two wash out really. But when you run a statement of position report, it'll show that you've got this debit equity conditional. You might even tag it with a description if you want to. And the credit unearned income, again, you could tag it with the description if you want to, and you could monitor this. But what happens at the end of the year if this condition isn't met? The condition is going to be met next year. Well, when you close the books out, you'll have these entries out there, and some people don't like that. So one way they handle that is on December 31st, assuming you're on a calendar year, they undo this transaction. And then on January 1st, they put the transaction back in with footnotes denoting that this is a tracking entry. So let's go ahead with this, assuming that it all happens within the current year. So you've got the tracking system, you've made this entry, debit equity conditional, and credit unearned income. The next group of entries, and that is a group, they have to be linked together, is once the condition is met, we move the unearned income into revenue. It's earned at that point, whether or not you've got it. And then you move the conditional equity to an account receivable. That'd be a debit unearned income, credit revenue, debit accounts receivable, and credit equity conditional. If you look at what we're left with at the end of that, the equity conditional is back to zero, the unearned income is back to zero. So really you have revenue and an accounts receivable. And this is happening in March. In our example, we said we'd hit the number in March. So when we hit it in March, revenue is going to show $1,200 in March and an accounts receivable. Then when you actually receive the payment, that's when you do the clearing entry, which is to debit the bank and credit accounts receivable. And that, in a nutshell, is how you handle grant accounting for conditional unrestricted grants. Now, going back to the opening chart, in this video, what we looked at was a conditional and unrestricted. In the next video, we'll look at conditional and restricted. But let's wrap up with some closing comments. So the entries are really pretty clear, and we are comfortable with how we do this. However, the challenges we have are at year end, whether it's fiscal or calendar year, you need to decide, are you going to leave these memo entries active or are you going to clear them out and put them back in? So this requires a little more discipline and understanding to make this work effectively. However, the benefit is that the risk of forgetting something is minimal. So I hope that's helpful, and thanks so much for watching.